Ever wondered what the Bitcoin halving is, and why it matters to you as a cryptocurrency enthusiast or investor? Well, let's unravel this enigma today. Bitcoin halving, as the name suggests, is a pre-programmed event that takes place approximately every 4 years. During this event, the rate at which new Bitcoins are introduced into the system is slashed by half. Why does this happen, you ask? This mechanism is designed to control inflation and maintain the scarcity of Bitcoin. It's akin to a digital version of gold mining, where the more you mine, the less gold there is left to be discovered. This event has the potential to significantly impact Bitcoin's value. Historically, we've seen Bitcoin's prices surge post-halving, driven by a reduced supply and an uptick in institutional interest. The upcoming fourth halving, expected in mid-April 2024, will decrease block rewards from 6.25 to 3.125 Bitcoins per block. Intrigued? Let's dive deeper into this fascinating aspect of the crypto world. So, how does this Bitcoin halving work exactly? Well, let's dive into the mechanics of it all. Bitcoin halving is a programmed event that happens approximately every 4 years. It's a part of Bitcoin's inbuilt monetary policy, inspired by the concept of gold mining, which becomes increasingly difficult over time. This event reduces the rate at which new Bitcoins are created and distributed to miners, effectively cutting the block rewards in half. Why does this happen, you ask? Well, Bitcoin was designed with a finite supply of 21 million coins. To ensure this limit is respected, and to control inflation, the rewards given to miners for verifying transactions and adding them to the blockchain are halved every 210,000 blocks. This roughly translates to every 4 years. Now let's take the upcoming fourth halving as an example. Here the block rewards will decrease from 6.25 to just over 3 Bitcoins per block. This is a significant reduction, and it has some interesting implications. Firstly, it affects miner rewards. As the rewards for mining new blocks reduce, miners may find it less profitable to mine Bitcoin, especially if the cost of electricity and computing power outweighs the reduced block rewards. This could potentially lead to fewer miners participating, which could affect the network security. Secondly, it impacts market dynamics. With fewer Bitcoins being produced, the supply decreases. Now, if the demand remains the same or increases, this reduced supply can lead to an increase in Bitcoin's price, as we've observed in the past halving events. But it's not just about supply and demand. The halving also brings about a change in market sentiment. It generates increased interest and hype around Bitcoin, which can further fuel price increases. It's also a reminder of Bitcoin's scarcity, which is a key part of its value proposition as digital gold. Now that you know how it works, you might be wondering, what does this mean for Bitcoin's price? The Bitcoin halving has a significant influence on Bitcoin's price, but how? Let's dive into the historical data to find out. The Bitcoin halving is a programmed event that takes place approximately every 4 years. It's like a heartbeat, maintaining the health of Bitcoin's economic ecosystem by controlling inflation and maintaining scarcity. Each halving reduces the rate of new Bitcoin issuance by 50%. The upcoming fourth halving, expected in mid-April of 2024, will decrease block rewards from 6.25 to 3.125 Bitcoins per block. Now, this scarcity created by each halving has a fascinating side effect. It tends to drive up the price of Bitcoin. Why, you ask? Well, it's a classic case of supply and demand. As the supply of new Bitcoins decreases, the demand, spurred on by increased institutional interest, often goes up. This demand, wrestling with a decreased supply, can lead to a surge in Bitcoin's price. In fact, experts are predicting a prosperous period for the cryptocurrency market in 2024 and 2025. This expectation is based on the pattern observed in the past halvings. However, it's not all smooth sailing. The halving could also lead to increased volatility in the Bitcoin market. So, while we might see a golden period, we may also experience some roller coaster rides along the way. But remember, while the Bitcoin halving can impact prices, it's not the only factor at play. External factors such as geopolitical issues, market trends, and even global events like the COVID pandemic can influence the value of Bitcoin. So while the halving is a significant event, it's just one piece of the larger Bitcoin puzzle. The world of cryptocurrencies is complex and ever-changing, and the Bitcoin halving is a key part of understanding this fascinating digital frontier. So the Bitcoin halving is more than just a technical event. It's a crucial part of Bitcoin's economic design. It's a pre-programmed phenomenon that happens approximately every 4 years, cutting the rate of new Bitcoin issuance by half. This is a fundamental measure to control inflation and maintain scarcity, which in turn has a profound impact on Bitcoin's value. Historically, we've witnessed a surge in Bitcoin prices post-halving, driven by this reduced supply and heightened institutional interest. But it's also vital to remember that Bitcoin halving influences miner rewards, network security, and market dynamics, with implications for price volatility and long-term holding patterns among investors. However, while the halving can significantly influence prices, it's not the only factor at play. Market trends, geopolitical issues, and a myriad of other factors can also drive the cryptocurrency market's ebb and flow. So, as we look towards the anticipated fourth halving in mid-April 2024 and beyond, it's essential to maintain a holistic view. The Bitcoin halving is a key piece of the puzzle, but it's just one of many moving parts in the dynamic world of cryptocurrency. And there you have it, the Bitcoin halving in a nutshell. Remember, in the world of cryptocurrency, knowledge is power. Stay informed and happy investing.